Welcome to the deep dive. Today we're digging into a really foundational player in the tech world right now, Micron Technology. They just released their fiscal Q4 and full year 2025 results. That's for the year ending August 28th. And, if you're looking for hard evidence of how the global AI boom is hitting the books, well, this company's financials really lay it out.
That's exactly right. We're going straight to the source materials, the financial statements, the press release bits. Our mission today really is to connect these pretty dense financial numbers, things like GAAP net income, the non-GAAP forecasts, connect all that directly to this huge demand surge for AI data centers. We need to pinpoint those specific KPIs, the indicators that really quantify where this growth, especially this profitability, is coming from.
Okay, let's unpack it.
Yeah.
Because the year-over-year figures, fiscal 25 versus 24, they are, frankly, staggering. It's not just recovery from a slump. This looks like massive acceleration. Something structural is happening.
Oh, it's exceptional, truly. When you just line up the full-year GAAP numbers side by side, the scale of the turnaround hits you immediately. Fiscal 2025 revenue, it jumped to $37.38 billion. Now, put that in context. That's up, roughly 50% from the $25.1 billion in 2024. Yeah. But honestly, that revenue jump, it's almost the least surprising part of this whole report.
Okay. You're pointing towards the profit side. That tells a much more dramatic story, doesn't it? About, operational leverage, pricing power.
Exactly. This is where the profitability just seems to hit warp speed. Look at the GAAP net income. It went from just $778 million in fiscal 2024 to a staggering $8.54 billion for fiscal 2025.
Wow.
That kind of spike. I mean, basically, they generated roughly 11 times the profit they made the year before. 11 times. That's the difference, isn't it? Between just getting through a tough commodity cycle and really dominating a premium market.
And for you, listening, if you follow earnings calls, you see that explosive profit jump mirrored right in the diluted earnings per share, the EPS. The number just rocketed. From 70 cents in FY 2024, way up to $7.59 in FY 2025. It's proof this isn't just about selling more stuff, it's about the margin on that stuff.
And that margin is absolutely key. The company's overall GAAP gross margin percent, it improved dramatically, jumped from 22.4% in 2024 all the way to 39.8% in 2025.
Huge leap.
Huge, almost 40%. A 17 percentage point jump in margin health in just 1 year. That tells us, well, one of two things, right? Either they were really under-earning before, or, much more likely, they're selling specialized high-value products right now that maybe competitors just can't match at this moment.
Yeah, and the CEO, Sanjay Mehrotra, he framed it perfectly, called it a record-breaking fiscal year. And crucially, he said it was driven by hitting all-time highs across our data center business. So that quote makes the link explicit. The AI trend, that's the engine behind these extraordinary numbers.
And what's fascinating, too, is how they positioned it. The company made sure to highlight their role as the only U.S.-based memory manufacturer.
Interesting point.
Yeah, that's a clear nod, isn't it? To geopolitics, supply chain security concerns. It appeals directly to governments, to those big data center operators who are trying to de-risk their massive infrastructure build-outs.
Okay, so we've established the scale of this annual recovery is just immense, but the market always wants to know, is that pace holding? Is the acceleration actually continuing? So to check the sort of immediate pulse of this boom, we need to look at the latest quarter, right?
Yeah.
FQ425.
Absolutely, yes. Got to look at the quarterly picture.
Yeah.
And shifting there, it confirms the acceleration is intense. Revenue for just Q4 2025, $11.32 billion.
1132.
Yeah, and that shows really strong sequential growth, too.
Yeah.
It's up significantly from $9.30 billion in Q3. I mean, they're adding billions to the top line quarter over quarter right now.
And for anyone, analyzing the real health of a business, we always look past just revenue, right, to operating cash flow. This is the actual cash the company's generating from its core business. It's such a critical sign of liquidity, operational efficiency.
And those numbers, incredibly strong. Operating cash flow in Q4 2025 hit $5.73 billion.
Wow.
So you can compare that. It's about 70% higher than the $3.41 billion they generated in the same quarter last year. Q4 24. It tells you the whole operational machine is just humming along, and that premium pricing, it's translating directly into usable cash fast.
And again, the company explicitly stated, this record revenue, this exceptional performance, it's tied to AI data center growth. So this brings up the key question for you, the listener. If AI is the engine, which specific part of the business is getting this windfall? This is where we get that real aha moment, I think.
This is exactly where we dissect the profitability. Yes, we need to break down the Q4 2025 results by business unit, see precisely where that money is flowing, and crucially, which segments are carrying the profit load.
Okay, I'm looking at the cloud memory business unit right now, And wow, this unit seems to have become the undisputed powerhouse here. The revenue growth is just phenomenal, nearly tripling year over year.
It's really something. The cloud memory unit revenue,
Yeah.
get this, $4.543 billion in Q4 25.
$4.5 billion.
Yeah. And just 12 months before that, in Q4 24, that same unit brought in $1.449 billion,
Yeah.
tripling revenue in a specialized segment in 1 year. That tells you pretty much everything about the current hunger for high-performance AI memory.
But it's the margins in this unit. They're genuinely exceptional. I need to pause on this. They hit a 59% gross margin, 59%, and a 48% operating margin, specifically for cloud memory in Q4.
Incredible numbers.
That's not your standard semiconductor margin, is it? That sounds like proof of a highly specialized, maybe supply-constrained product, commanding just huge prices in a critical market.
That 59% figure. That explains exactly why the overall company margin leaped so dramatically. This one segment is essentially, well, it feels like it's paying for everything else right now. But now, let's look at the contrast, because this is where the whole transition story gets really interesting.
Yeah, the contrast. This might be the most telling data point in the whole report. Look at their core data center business unit. This is like the traditional server memory business, right?
Just standard stuff.
It brought in $1.577 billion in Q4.
Okay.
But that number was actually lower than the $2.048 billion it made in Q4 of the previous year.
That juxtaposition, it's profound, isn't it?
Hmm.
It really demonstrates that this AI transition isn't just, adding another layer of growth on top. It seems to be fundamentally replacing the old revenue streams, or at least overshadowing them massively.
Yeah.
Demand for standard core data center memory looks like it's shrinking, or maybe flatlining. While this specialized cloud memory needed for AI accelerators, it's just exploding. It shows the transition feels structural. It feels absolute right now.
Okay, so just to round out the picture then, the other key segments. The mobile and client business unit looked pretty solid at $3.76 billion revenue in Q4. And they showed good recovery in their margins, too, hitting 36%. That was up from 24% the quarter before.
Right. Good sequential improvement there. And then finally, you have the automotive and embedded business unit. This shows that steady diversification effort. Revenue was $1.434 billion. And this unit had the lowest margin, 31%, which, that's kind of expected given the different market dynamics, longer qualification times for auto parts and such.
Sure.
But it provides stability, doesn't it? While the cloud memory unit, that's where the profit fireworks are.
So, okay, we have undeniable proof. Historic financial year driven by these phenomenal margins, specifically in the AI space. Now we have to look ahead. What's the company actually projecting for the next few months? We need to turn to the guidance for Q1 2026. That quarter ends in November 2025.
And they are definitely not signaling any slowdown. Not at all.
Yeah.
The Q1 2026 non-GAAP outlook is highly ambitious. Revenue forecast, $12.50 billion, with a plus or minus $300 million range.
$12.5 billion.
Yeah, they're basically expecting to continue this record-breaking run rate.
But the real confidence signal here, maybe even more than the revenue number, it's the margin forecast, isn't it?
Absolutely. That's the number that really pops. They're forecasting their non-GAAP gross margin to be 51.5%. Plus or minus 1%.
51.5%.
Yeah, forecasting margins to exceed 50% for the entire business. That's a phenomenal statement about the kind of pricing power they expect to keep commanding for this specialty AI memory. And diluted EPS is forecast around $3.75.
Right. Now, to even think about hitting and holding 50% plus margins, you absolutely have to be investing astronomical amounts, right? To stay ahead technologically. This incredible profitability has to be weighed against the just massive capital needed to build the capacity for this demand.
That's critical context. You're exactly right. The high expected profit is matched by enormous capital expenditure, or CapEx. Total CapEx net for the full fiscal year 2025. $13.8 billion.
$13.8 billion.
That figure.
Yeah.
It's essentially a declaration. It shows just how massive the barrier to entry is in this AI memory market. You just can't play in this specific game without throwing down double-digit billions every year just to maintain your position, just to keep pace with the tech demands of AI.
And yet, despite that huge, absolutely necessary spending, they still ended the year with very strong liquidity, nearly $12 billion in cash and marketable investments on hand. And yes, they did declare their regular quarterly dividend, 0.114 cents per share, payable late October. Shows confidence in ongoing cash flow.
So, okay, let's try to synthesize this for you, the listener. fiscal 2025 for Micron. It was a year of just explosive recovery, fueled directly by this insatiable premium price demand for high-performance memory. And we can quantify that value. It's right there in that staggering 59% gross margin they hit, specifically in the cloud memory unit last quarter. The financial data just gives you undeniable proof. AI infrastructure, that's where the highest value and definitely the highest margins are located right now in semiconductor memory.
That really is the core takeaway, isn't it? It's a very specialized boom, not some kind of generalized recovery across the board.
Which raises, I think, a really important question for you to mull over as you look ahead. Given the company's obvious confidence, forecasting non-GAAP gross margins over 50% for the near term, and considering that immense CapEx investment, $13.8 billion just spent in 2025, a number that seems necessary just to compete at this level, how does a memory maker actually maintain such incredibly high anticipated profitability? What is that trade-off between the massive sustained investment needed and these exceptional margins? What does that imply for the long-term stability and, the eventual, maybe inevitable commoditization of even this high-end AI memory market down the road?
That paradox. The high cost of entry versus the incredibly high reward right now. That's the central tension in this whole story, isn't it? Definitely something to keep digging into. Thanks for joining us. We'll catch you on the next deep dive.